Alrighty, welcome everybody. Make sure you're subscribed so you can chat with everybody on the live stream. And good morning, my magnificent monsters. Welcome back to the show where I drink my caffeine cold and give my financial hot takes. Maybe they're good, maybe they're not. Grab your zero sugar rocket fuel. That's how I do it. I mean, you can go full sugar if you want, or you can just go with the black stuff, coffee. Not my preference, but you do you. Because today we're diving into a national pastime, a sport mode, maybe more frustrating than golf and more expensive than yacht racing. Scrolling through Zillow listings that you can't possibly afford, maybe. I mean, you know the drill. You find that perfect 3-bedroom, 2-bath, got a yard and a dog. Wait, maybe yard for the dog. Maybe a garage for, well, let's face it, we all just fill the garage with boxes of stuff and leave the car outside. And it's listed for the low, low price of firstborn child, 2 arms, 3 legs, and a lifetime of indentured servitude paying off the debt. You see, the estimated monthly payment, and it's almost comical, right? It's a ridiculously high number most of the time, at least these days. A sad, hollow laugh, the kind of laugh that says, well, I'm going to be a slave the rest of my life. Maybe living in a van down by the river with Goose is probably a better retirement plan. But fear not, aspiring homeowners. A hero has emerged from the clouds, riding a golden escalator. Maybe the stairs paved with gold, bearing promises of affordability for all. That's right. President Trump has unveiled a multi-pronged attack on this housing crisis. He's got a plan, a beautiful plan, the best plan, no better plan. And today, we're going to take a look at whether this plan is key to your dream home or key to get your votes, or is it even key to solving the problem at all? So, first up, the big one, the headline grabber. Trump directed Fannie Mae and Freddie Mac, the 2 giant government-backed mortgage companies, to go on a shopping spree, a $200 billion shopping spree for mortgage-backed securities. It's kind of funny. Aren't they the ones that create the mortgage-backed securities? So they're going to buy their own product? Now, for everybody whose eyes just glazed over on that, let me kind of break this down a little more simply for us. This is like the government telling your parents who co-signed your car loan to start making some of your car payments for you to make the loan look better for other people. Yeah, it's a big splashy move, and it worked for about 30 seconds. Mortgage spreads tightened. The 30-year mortgage briefly dipped below 6% for the first time since 2022. The crowd went wild, and then we woke up the next day. But let's get real. A 15 basis point drop, which is, basis points are not, I mean, they're like the decimal points in the interest rate, is the financial equivalent of a light breeze on a scorching hot day. It's nice, but you're still sweating to death. We're a long way from 4% rates of the 2010s, where we moved a lot of houses. Morgan Stanley basically said the market already priced in this news, meaning the party was over before it even started. They already kind of figured that Trump was going to do this. It's a shot from a bazooka that sounded loud, but I guess didn't have any power behind it. It didn't even hit the target, really. I mean, it like kind of bounced off. It's like a Wile E. Coyote thing. Next on the chopping block, the big bad institutional investors out there. We're going to get these out of the market, right? The Blackstones of the world. The narrative is simple. Wall Street has swooped in after 2008, bought up all the houses. And now is your evil corporate overlord or landlord. Trump is saying he's going to ban them from buying any more houses. Sounds great. Stick it to the man. But there's a punchline here. And it's a pretty good one. This is all political theater. A ghost story to scare you. The reality? Institutional investors combined only own somewhere between 0.5 and 3% of all the single-family homes in the entire country. Blackstone, the poster child for this one, owns a whopping 0.06% of all the homes. That's not a typo. That's not a misspeak. That's not a, I went and pulled this number. 0.06%. They barely own any. Banning them from buying homes is kind of like banning a squirrel from buying all the acorns in the forest. I mean, it's not like they could ever do it. It makes a great headline, but the squirrel was never going to go further than the next oak tree anyway. The vast majority of rental homes, over 80% of them, are owned by people like us. The investors, the actual investor, the dentist who owns 3 properties, the mom and pop who owns 6. People that rent properties. They buy them for Airbnbs. They buy them for rentals. That's where the majority of the single family homes that are owned by corporations is small family businesses. But here's the investment angle for us. The fear of this ban, however, maybe it's toothless, caused a little bit of panic. Stocks of these big publicly traded landlords, the Invitation Homes, ticker INVH, and American Homes for Rent, AMH, Blackstone, BX, they took a hit. They got cheaper. So if you believe this ban is mostly for show, and that the actual rental market for single-family homes is still a solid play, well, you just got a sale. Courtesy of President Trump. You're welcome. Now, for the grand finale, the pièce de résistance of this political pandering. The plan, the glorious plan, the latest post is to let people like us raid our 401k for a down payment. The details are still hazy on this one. Haven't really come out in full. But something about being able to take 10% of your home's equity out of your 401k, which sounds creative and maybe financially innovative. But this is our retirement money. Think about this for just a moment here. The government's telling you, hey, that money that you've been diligently saving for retirement, that money that you're not supposed to touch for 40 years, that you're supposed to count on when you get old and go into your golden years, well, let's gamble it on the most inflated asset class in recent history. The housing market. What could possibly go wrong here? Sounds great. This isn't really helping people who need it most. Well, it's not really helping affordability. It's just magic money. More magic money. Only about half of Americans even have a 401k account to begin with. Even less of us actually contribute to it at a reasonable level. This is a plan for people who already have a decent chunk of money and probably don't even need to tap a 401k for a down payment. And what happens when you give a bunch of people with a savings account a new way to bid up the prices? That's right. supply and demand, prices go up more when you make more money available to buy the already expensive things. I mean, it's like pouring gasoline on a bonfire to put it out. Doesn't really work. This is a classic case of pulling demand forward. It might create a short-term sugar rush of home sales just in time for an election, but doesn't do a darn thing to solve any kind of fundamental problems like affordability. I mean, the bottom line, the supply is just tight, and we don't have enough homes. It puts your retirement at risk, and it's a Hail Mary pass. And I think we're all the footballs, or maybe we're just the turf being played upon. So the government's plans are mostly smoke and mirrors. And where does this leave savvy traders and investors looking to take advantage of this situation? Well, we got 4 pillars of ways to play, I guess you might say. First off, the builders. The only real solution to a housing shortage is to build more houses. It's the only real solution. Duh. Home builder stocks like Lennar, Pult, D.R. Horton, Toll Brothers, they're offering things like mortgage rate buydowns to lure in buyers. And they're gaining market share. They're the ones selling the shovels. Lennar and Pult, in particular, in a prime position. The landlords, well, we already mentioned they're kind of on sale. As we talked about, the big SFR REITs like INVH and AMH, they got punished. Maybe unfairly so. If you think demand for rental homes isn't going to go away, well, when you have affordability this bad, rentals probably aren't going away. These are worth a look. And then you got the mortgage middlemen, mortgage REITs, the companies that invest in all this mortgage debt. Things could get interesting here. The government's $200 billion push might be mostly priced in, but it shows a commitment to keeping the mortgage market moving and liquid. So look at ETFs like REM, Romeo Echo Mike, for broad exposure here. And, of course, you got to be careful, right? You could play rates, but that's a sketchy market. It's a hard way to play. But you could play the rates with the banks, maybe gold. As we pump more money and more liquidity in the system, gold keeps ripping. So that's the fourth way to play. Now, look, the housing market, it's kind of a mess. It's a complex problem with no easy answer. And when politicians start offering simple solutions, we should all get really skeptical. I mean, really skeptical. These plans are designed to get headlines and votes, but there's probably not a real way these are going to make housing affordable to the average person. So what's the takeaway here? Don't bank on a government bailout for your dream home. Instead, be the savvy trader. Understand the difference between political theater and market realities. Look for the opportunities that fear and hype create, and keep being prepared, because this market, cash is still king, especially on this dip we're in right now. And our monster fueled brain is our greatest asset. Stay caffeinated, stay critical, and let's get into some charts and see where things are moving today. We've got a nice little pullback. We got a nice little pullback. And the market's already on the dip this morning, but let's take a look. Let's take a look, shall we? Man, I got alerts piling on here. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade any of those things, you might lose money. And What happened to the payout from Doge? There was never a payout from Doge. You believe that? Got a bridge to sell you in the middle of the ocean. It's all smoke and mirrors, everybody. All smoke and mirrors. They say a lot of things. Very little of it's true. So we've got a pullback. We've got a pullback cooking here. Where are we going to go? So we had this arrow back here. I thought we would dip further back here in December. Turned out we just ripped on up to the top of the arrow. Look at that. Pretty darn close. Now, starting to pull back. We got below this level. And we have bigger downside potential. So looking at the S&P here. Love all the alerts this morning. Pop that off. Gotta just clean up the chart just a little bit here. We've got the low right down here. Got this high right up here. And man, freaking alerts. There we go. There we go. It's possible we come right back down here. The low from Thanksgiving, the high from last week. 618 right there. This correction could take us a little while. This could all come up here. Could be right over here before we get there. So, but it could go fast and we could just pop on down here in the 66, maybe even 6,500 area. That's what the chart's kind of telling us right now. Be careful. So far, we're holding on to that low. So far. If we get below it, right there. This was the level that I was cautious about. If we touched it, it can kick off a bigger correction. And guess what? We touched it, and we had the first indication a bigger correction might be taking hold here. Looking at NASDAQ, this was the bigger indicator. We were not pushing higher at all. Not pushing higher, not pushing higher. And this may take a swift dive back down to the roadmap line. 618 right down here. Again, same situation as ES. We could find support where all this comes together. We could go faster down to the roadmap line. And if things get a little too spicy, we could break on through. Now we'll take a look at the end of the show. We'll take a look into the gamma exposure and kind of see where the market's pricing in the move for today and try to read the tea leaves on that. And yeah, Elon gave up on Doge. Like he was like, you know, they're not serious about cutting anything. So that was the fallacy in the system. You know, it was political theater was really what it was. That's why Elon went in to cut $1 trillion of spending, and Congress didn't really want to do that. So they weren't serious about actually cutting. Nobody's really serious about it. Elon was serious about it, but he gave up, moved on. 2740. Looking for that to hit. May find support here back at 2600 on Russell. Expecting 2700 still. This is not pulling back nearly as bad as S&P or NASDAQ. So it's kind of interesting. We're seeing an outperformance in small caps. And they're the fastest, most agile, able to adapt to current situations. But if they top out here at 2700 and start down in a big way, it's a big warning sign. So 3100 will be the next target up after we tag 2700 if we're going to do it, but we may have to come back here before we can go up there. So was that close enough to consider touching, or we gotta take a revisit of this high back here at 2600 and then pop? I don't know. There's no clear path at this point. We've already hit the 1448 target. That was our, going up to 26. All the way back in June, I said we were going up to that 2600. And that's where we went. But what's next? There's no clear path for next. No clear path for next. Oil keeps grinding right here under the roadmap line. Now, this was a 3-wave move. First move down, retrace, watch for the bigger next move down to a lower low. Cautionary price action here. We did break through to the roadmap line though. So if we hold here above this downtrend of highs, push back through the roadmap line, this could tip things more bullish. We have this bigger long-term downtrend of highs. And if we get through that, we could actually turn oil bullish. And then that's going to put inflation pressures on everything. So this is a key to watch right here. The biggest component of inflation is right here. And if that low was it, came up shy of the target. But if that low was it, and we actually build some upside, the target up here is 100. Gold ripping on all the shenanigans. If you were in the gold rush trade, well, if you decided to hold, congratulations, you should probably close it. I'm going to pull mine up really quickly and see. Oh yeah, I closed out. Cha-ching. Beautiful. Closed out right at the open. So if you're in the gold rush trade, book it, baby. Bitcoin, as I said, is not bullish. That was not bullish price action. That was not a breakout. And right back here we are. Right back in the mix. If this breaks down through this uptrend of lows, we are looking at visiting the 70,000 area. 70,000s. 75 would be my initial target. And if things get uglier, and we are in crypto winter, 75% pullback, as I covered yesterday, it's going to be down in the 30s. Even just a 70% pullback, down in the 30s. And just caution about this. This is so far somewhat bearish setup. If we get continuation lower, it can definitely come on down in a pretty big way. Potentially setting up a 1, 2, 3, 4, 5 down. That's what it looks like right now. I would expect, this is a little bit cleaner here on IBIT. That's why I switched over. 3, 4, holding, no overlap. We come down for a 5. Probably see a 3-wave retrace back up in here somewhere. And then embark on the bigger down to the lower low out there in the typical time frame, 12 months from the high. Late September, early October, probably be when we make the low. It's just a normal 4-year cycle on crypto. Be careful. Be careful, be careful, be careful, be careful, be careful. I don't know how many times I can tell you to be careful, but be careful on crypto. Ethereum rejected off the roadmap line pretty aggressively here is the word I would use. The uptrend of lows is already being breached here. Depends on which low you use, I guess. But we're already breaching it. That's not so good. If this closes down here today, continues back, maybe we get a little rally, back test it. That's a sign for a bigger down. Now, the most clear chart I have example for this was right here on nail. We had a long-term uptrend on home builders. Right here, we broke down. We rallied back up, back tested, and then, ouch, took a spill. And this is not exactly bullish price action here either. 3x leverage on home builders. So despite the potential for home builders to turn around and get some positive boom action going, not sure the 3x leverage is telling us that story right now. Always something else you can see in the markets. Now looking at global liquidity, NKD. As I kind of speculated we might see, this looks like we're coming back through. If we don't hold on to this, like if we get any kind of continuation here today, probably coming back down here, and that's going to spark a bigger correction across risk on assets like Bitcoin, Ethereum, S&P 500, and NASDAQ right here. It's a global liquidity proxy. We came up into the target. That was pretty much it. That's where I'd been looking for the top for a while. So watch out for the retrace back down in this vicinity. Probably take other things with it. Dollar turning back down pretty violently off the roadmap line. Also as expected. So now we're at the question mark here. Do we hold this 618 and bust out? Or do we push through and go for the lower low? Decision point right here. There's no high probability move at this point. Somebody else might tell you more, but so far this is a setup for a breakdown, but we got to get the continuation right here. If we reject it, break through this high, probably going on up to 102 and putting the screws on pretty much everything short the dollar. So what's the idea if you're holding Bitcoin? Sell calls. Sell upside calls. Yeah, I highly recommend. Oh, look at that. Right to the roadmap line. Anybody played that? Time to start thinking about booking profit. Amazon. This may come back down for a secondary bounce or tertiary bounce or whatever you want to call it. I call it a secondary bounce when we do the high-low bounce, trigger the entry, and then come down for a bounce. I usually call it a secondary bounce there. Typically, this will go on to hit the target. I did warn that this may take longer than... I know a few people were pretty aggressive that this would happen quickly, and we just go spiking right up there to it. But I kind of foresaw a bigger correction in the market taking place, and this could grind for a bit before we actually get on up there. The average trade can take, 2 months for this to play out to the target. The 99th percentile, 7 months. And that leaves 1%, roughly, maybe a little less than 1% that can last indefinitely. And this could just churn in here without breaking down below this low or without breaking above this high. It could just churn in here for indefinitely. Now, the statistics on this pattern, entry was right back here 95% of the time, with 24 trades in history, which is not a statistical population. 6 trades less than a statistical population. 95% of the time, we've gone on to hit the target right here. Time frame for that? That's the question. The last one back here went pretty fast. Happened in just a couple days. But the rule of averages, since this one happened so darn fast, this one might take a while. Take two of anything. One's above average, one's below average. The average is in between. You and some other person on the road, one of you is above average. One of you is below average. Google. Dun, 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 dun. We tagged that 337. Very normal thing to happen would be to come back down, retrace the fib line before we pop the next one. And the little mini pullback here on the, I think it was a 4-hour chart. Oh, 1 hour chart. Yep. 1 hour chart bounce right up to the target, right back down to the roadmap line. So this could be the next bounce in the series. Put us up to 343, 346. That high, that low, that move. If we can turn, get through the 618. Right there. If it turns into a bigger correction, 4-hour roadmap line is down here near the bottom, near that fib line. And then the daily is quite a ways down. Down here at 250, 260. Meta has not been able to materialize the bounce yet. I haven't taken any position. I'm still waiting on this to prove that was the bottom. If it's not going to hold right here, we may poke right down in here and then reset the pattern for a bounce. Still waiting on the proof that that is going to hold here. Microsoft, it's on the way. Right down here is where I expect it to go. Let's remove a few of these fib lines. At this point, right down in here is where I expect this to go as it comes on down. Right down in there. It's not that far away. Not that far away. NVIDIA. Only talked about this 9,000 times. If we get through the roadmap line here, the retrace is 150 support. And if we get through that, well, we could see a bigger retrace take hold. Somewhere down in this pink box. So right now, those highs from last year would be where I expect it to come down to. And then if we get below that, the pink box. So first support, second support, third support. And this one's big. It's a big box. Tesla. Let's see what we got here. What did we shape up to? I talk about lots of stuff, so I'm trying to clean some of these charts up. This was the retrace area I expected to come visit. Got to break above that high. And it looks like we're pushing nominal lower low. This could set us up to retrace a little deeper. Back in the roadmap line. If we keep pushing below that. You know, we have earnings coming up here next week. Next week? Wow. Yeah, next week. Could just grind into the low here into next week and then bounce. It looked like we were going to climb out of here and then maybe pull back on earnings, but now this is starting to look like we're going to grind into earnings, which sets us up for a potential pop. I guess as we get closer to earnings next week, we'll find out which way this is looking. 70% of the time we drop on earnings or drop after earnings on Tesla. We'll go through those numbers as we get into next week. Netflix, surprisingly bouncing today. even though it needs a little trip down here to 85 to kind of clean this up. So I can find a bottom anywhere in here, but it looks best if we just visit the bottom down here and set up the bounce. So I go pull gainers in the pre-market, which looks like mostly gold. And I go pull decliners, which is pretty much everything else in the market. There's like 237 of those. And I hunt for some opportunities. As things that were moving down, up or down in the pre-market, some of those are already reversing. Most of them tend to, whichever list they're on, they tend to go that direction all day. Few things reverse, but most everything else just kind of stays that way. But I also have 8 setups that were ripe to talk about today. And they mostly may be busted. So go ahead and take a look at those really quickly. Oh, look at that. That one's pretty spicy. Here's the high. Here's the low. Entry right there. Target right up here at 291. CME is the futures. CME Group creates a lot of futures products. Investment banks and brokers. The CBOE announced over, I guess, Friday late that they were going to be adding new options on the Mag 7s. So instead of just Friday options, we're now going to have Monday, Wednesday, Friday options starting next week on Apple, Amazon, Microsoft, Google, Nvidia, Tesla, whatever I left out, Meta, and then a couple other ones like iBit, AVGO, and some other stuff that traders trade a lot. So more opportunities, more expirations, kind of changes the game. We're heading toward daily options on all the liquid stuff. So maybe later in the year, we'll actually have everyday expirations for Tesla, Apple, Amazon, Microsoft, Meta, Google. But that's CBOE, and this is CME, so this is futures. It looks like we're going higher. Turn on the algorithm. There's the entry. Target's 291. Stop is $1 below the low, down around 261. Pull this back down to the bottom. Next one up. Oh man, these look pretty good. Let's see. What was the CME one? 14 trades. Has a negative profit factor. I'd be careful on that one. 35%. This one tends to fail a lot. That's what that says. EVRG. Next one up. 52 trades. 73% profitable. And basically it's a coin flip on making money. There's the entry. 80 is the target. Evergy. I don't think I've ever even heard of this thing. It's crazy. 52 trades. It's been around forever. 1973. IPGP kicked off an entry back here. Made a slightly lower low, but didn't stop it out. Stop is $1 below the low. This coming back up through. 95 target. It actually picked up this small little 87 target. You can go for either one. PBA. I don't like the downtrend going here, but still a potential trade. Entry 40, 42 target. SPXC. This is a nice uptrend going here. Here's the high. Here's the low. Here's the entry. 241.59 target. 38 trades. 84. 2.5. This one trends. Pulls back. Continues. Not a bad one right here. SPX Technologies. A building products supplier. TFSL. I was already in this one. This is one of my double dip trades. I probably already cashed out actually because it hit the target back here. So another opportunity for this one. There's the high. Here's the low. I may go issue this as a double dip trade today. Here's the entry target right up here at 15. Not too shabby. Double dip trades pay high dividend. This one pays 8%. And the way you capture that 8% dividend is in shares, so this would be a shares type play. TRNO. Torino Realty. Another. This one pays 3.3% dividend. So here's the high, here's the low. Entry 64.37 target. And that's the list for today on that one. Hunt for some other opportunities here before we dive into the... I warned about RSP when it tagged 199.57 that we might get the pullback, that might be the top. That was on my market dashboard. And that's exactly what's happening here. Let's see, other things. Split has occurred, adjust the drawings. And that one did the bounce, hit the target, and now we're retracing. Man, that one tried to break out and failed pretty miserably. Yikes. Didn't quite even get to the target. Let's see what Robinhood's up to today. There's the potential right down there. That was the upside target on the big oval. Exceeded it just a little bit, but now coming back down is the next potential. Let's see, DoorDash. First move down, retrace. Could be heading down here. We could kick off a bigger correction in the market here. Palantir, if we're gonna get continuation, it's gonna bring it right down here. Snowflake, there, hitting the first level of support. Next level down here. Then we want to see it break back higher and go on higher, go on up here. Go on higher. Wow, that happened. That happened nice and quick, actually. Slick. Let's see, Visa. Haven't found a bottom yet. That may be first move down and retrace. Kind of ugly right there. Kicked off the upside potential, but I guess we're gonna find out about the interest rates this week. It's supposed to kick in today, but I guess we'll see if how that plays out. That continues on. Visa's not really a. I guess if credit card issuers, so there's sponsoring banks that partner with Visa for processing, and if those sponsor banks are who issues the interest rates, if they start canceling cards because they're limited to 10%, I guess Visa would suffer because it's less transactions. I don't know. Same for MasterCard. If we see this get continuation, same kind of area here. It's the logic behind what's going on, I guess. Restoration Hardware. That has a nice bottom in place here. If we can break above this high, sets up a bigger upside potential. Back to the all-time high. It set me an alert right there. A-Lab, if we can break through these 618 upside. Carvana may come back to the roadmap line. It's already hit the targets. 3M. Nice retrace. Here's the high. Here's the low. Break back through. Break back through 168, 177 upside. CRWD. Yeah, they're still working on the space below me. So, I mean, David, if you haven't been here for 2 months, they've been rebuilding the office underneath me, and it's still happening. So, I'm guessing that February 1st, they're trying to move in the Edward Jones office. So, and that's what it is. They're down there. They use a vibration saw for pretty much everything, I guess. It's like the one tool they have. They don't have nail guns. They don't have screws, drills. They just have a vibration saw. They use it for everything. And yeah, a lot of gold on the list. Mining companies. Be careful because they're probably going to pull back. And I guess let's take a look at where it might go today. I like how there's a lot of people here on the big down days are freaking out, but I've been warning about this day for a while. We've been talking about it. We've been warning about it. It's not even a surprise. That 610 was the bottom of the range. So there was a chunk of options sitting at 610. Pull over the Gamma. Check it out. Gamma's like putting on our night vision goggles. I use bullflow.io. Link is in the description if you want to get access to this kind of tool. Still, I mean, 610 was QQQ level. 680 was the SPY level down here. Looks like we still got downward pressure to 680. Interestingly enough, not a lot of players playing today. Oh, we're scrolled over. There we go. Still not a lot of players playing today. Playing out to Friday, that 680 level. So there's support at 680. But if we poke on through, big levels all the way down here. Looks like we got big levels all the way down to 660, which jives with what I was saying earlier. So this has 660 levels down here. On Gamma. So if we break below 680, we might take a trip on down. Now look at the bigger bounce here. There's the high, there's the low, there's the high. The retrace, yeah, somewhere in the 660 area might be where we need to go visit to find support. QQQ, 610 level was the bottom of the GEX. That's the level I've been watching because I play in NASDAQ every day. So let's go grab the QQQ, pull that over. There's not really a bubble formed, and there probably won't be for another half hour or so if it's going to form. And the bubble takes us on down to 609 right now. Big level at 615. Not really anything out to Friday on Qs. So Qs are playing closer to the chest right here. Most of the day traders trade in SPY. Qs are kind of a side effect. Lead on. So we've got levels for 615, which is just right there. That'll be a resistance point. And then we've got down to we've got a 605 building, but 610. Let's go see where the market might screw the most people. Don't have it by. So we're hanging in here. That screws all the call players. And yeah, back up in the 615 area. That big put level may pull it back up. kind of balanced. And we may hang out just under 615. So I don't necessarily see a bigger drop happening today. Maybe more of an organized chaos thing. Now, it can let go of the rope and drop on out, but it seems that we've come down to gamma support right now on Qs. You see the big level down here at 680 where we tagged on SPY. So that could be intermediate support for today. Looking at the levels. Yeah, we would. If we take it back up to 685, we would probably screw the most number of put players. Now, there's no guarantee that it stays in this. Like, we haven't had a big trending day since I've had access to this gamma tool. We could just go ripping back out of here. Like, that could be the bottom, and we could go on to new highs. So definitely be careful. That was a 3-wave retrace. You know, these gamma levels are gone. Let's see. This right here. You know, we hit down in the at the point where this can turn and burn here. Does not have to go further. But we'll put that 680 level in here on SPY. If we hold that turn back higher, let's see what we got here. 1 hour, 4 hour. So it doesn't make sense to necessarily stop here. We may push down just a little bit. We may see a push lower and bounce off of that 4 hour support. We haven't been down there since Thanksgiving. So we could see a little more softness into that area right there. QQQs are already there, so we could see this hold up and bounce more vigorously than SPY. We could see some weakness keep going in SPY, and we can see QQQs holding up here. Now, the daily roadmap line might be where we ultimately head down to. I don't think we're going today necessarily. The options just don't look like they support it. Day traders tend to mute the price action. We get these big gap downs on the weekend, and then day traders kind of mute the price action during the week. So we may see, a organized drop into this Friday. Then it could take a bigger drop after that. It's kind of the way the options have been playing out, with mega levels of options getting played each day. And there's just not a lot happening. We've got a bubble forming on a SPY now, right here. It's all red though, so that means the market makers will be playing in the same direction, so it's increased volatility. So if we start ripping, prices will go faster up. If we start dipping again, prices will go faster down. There is still a 100 million level down here at 675 for today. Could go visit that. Looks like 680 is kind of where we're gonna hang around for this week on SPY. It doesn't mean we don't dip and come back. And we're kind of at the... We're building some bigger levels down here, so this could dip on down today. All the way down to 603 right now. So this is one to keep an eye on. We start back up into the... There's no real big levels today so far on Qs. Just kind of hanging right here. That 450 level up at 615. Or 415 level. No big level out to Friday. So it's an interesting differential story between Qs and SPY. There you go. Yeah. If you go just from Friday drop, 6, I would go all the way to the high if I was going to do the fib line there. So 621, but there's no options up to 621. But we could see a bounce up into the 621 area pretty easily here. That's a 3-wave drop right there. Let's remove a few things here. Let's clear this up a little bit. That first drop, this retrace, and we're in a reversal zone. So if this was an absolutely beautiful correction here on the 4-hour, we're in a spot that can reverse violently on some good news. Now the options are suggesting we might stay in this zone right here for today. But if we get out of that, we can start ripping. The upside will be up here at the 630, 634 area on the target. I don't think we'll get there today necessarily. But there's your potential. Potential to get continuation, but that's probably pushing the limits. You know, we could get a little bit deeper in a 608, but we're pushing the limits of this move down until we get another potential bounce. Could be a small bounce. This could be the one, two, let's see. 2. That definitely exceeded what would be a 3. We could have a little bit of chop here and a 4-5, and this could last into tomorrow maybe, where we chop in here and then get the final push down. That would be a 1, 2, 3, 4, 5 for that C, and then we could take it back, like could clean it up to go higher again. With just the limited gap down information we have, not entirely clear. Looking at the NQ with more information. I would want to see it dip a little bit lower, but you got to watch these lower time frames. If we start breaking through the 15-minute and the 30-minute roadmap lines, and then the 1 hour, we're probably reversing the drop here. And that's the bias for the day right now. Anything I said was helpful. Hopefully, looks like we lost about 30 people off the stream, so that was apparently not what some people were looking for, but I feel like that was the most clear way to trade it today. If you're looking to box in price at some point today, I'll probably be looking to roll in here, plays NASDAQ later about 1:30, and try to put a position down here in the 24s. Have a great day. I'll see you later on. I'll be on Market Masters 11:30. I'll be on 30 Minutes of Awesome, 5 p.m. Eastern. Come see me. The only time of the week I do requests.